Thank the chairman. I thank Chairman Powell for his testimony today and in listening to the discussion this morning. I think we need to be clear on the record, both chairman of the committee and chairman of the Fed, that the biggest thief for working people in this country and across the world is inflation. Nothing depresses buying power more than inflation, and nothing cuts into those at the hardest working part of our society than inflation. So I think minimizing inflation and having dollar stability and safe and sound capital markets are a worthy objective of the Fed. And so thank you and your colleagues for fighting for modest inflation so that people have real wage increases. And I do believe that one of the benefits of the restructuring of our tax system will be to increase productivity, and productivity will see wages go up, and we've certainly seen that here in the first 2 months of the year as company after company has talked about that. Mrs. Moore referenced it as well, but I saw a Morgan Stanley research study this week that calls for earning projections for 2018 to be up 8%, and that over 44% of those companies fully expect to reinvest in their companies in training and capital expenditures, and both these efforts will produce higher wages. And another 30% of companies plan to increase CapEx to increase productivity as well as distribute more earnings. So I view these things as positive for our economy. I want to follow up on Chairman Hensarling's comments a bit, Chairman Powell, about your exchange you had on the Volcker rule. The chairman talked about a bill I've introduced to harmonize regulatory oversight because you've noted in previous testimony, President Dudley has, even Mr. Torrillo has, about the complexity of this rule, that we're not getting it done. We're not doing a good job of even enforcing the rule. But on this harmonization bill, I've had some difficulty in getting members to understand that giving relief to banks under $10 billion, community banks, which is what is in Senator Crapo's bill over in the Senate, is somehow letting those community institutions sort of off the hook of safe and sound banking practices. And I'd like for you to respond to what I've told them. By saying our community banks are not subject to the Volcker rule, that doesn't mean that they're not subject to the careful scrutiny of our bank regulators for safe and sound banking practices. And isn't it true that if one of your regulators went in a bank under $10 billion, a holding company, and they were doing something that you deemed unsafe and unsound related to Volcker-type activities, that they could be disciplined for that under the existing banking rules?
Yes, sir. It is absolutely true that we don't need Volcker to go in and find unsafe and unsound practices. In addition, certainly in the bill you mentioned that Senator Crapo has introduced, you also have to, you can't have anything more than a very small trading book in the first place, even if you are under $10 billion. So we don't see significant safety and soundness or implications at all from that.
I appreciate that. I just think we need to be clear in this committee that we have the tools necessary to enforce safe and sound banking practices for banks of all sizes, particularly those in the smaller size that's referenced in my legislation, but that the real mission here, by designating the Fed as the principal regulator among your colleagues, that will get better, more discreet interpretive guidance on how to properly enforce the Volcker rule, which I think is a big source of confusion around the capital market system. Do you agree with that?
I do. It has been difficult with these multi-agency groups to get to agreement, and the Volcker rule in particular, I think, is quite complex, and we can certainly simplify it.
I think when you've testified previously, said that some trading desks needed a Ouija board to figure out what the decision to make, and that freezes up capital markets in times of illiquidity. That I'm the most concerned about is misinterpreting that rule by compliance departments. Have you seen that in your work with your district bank presidents about that exact thing where we're hurting illiquid securities?
So we do hear that. We do. I mean, I think it stands to reason if you provide more certainty about where the law applies and where it doesn't, and you don't have to convene a giant meeting and break out the Ouija board to find out whether you're complying with the law or not, then you're going to have more certainty and you're going to have people being able to do their business better.
Well, I appreciate you, and I wish you my very best wishes for your service as our chairman of the Federal Reserve.